Okay. Let's dive right in. I want you to focus on a very specific moment in time because it's the key. It's the key to this whole story, and honestly, it's the part that really unsettled me when I was digging through the sources for this.
Right.
The date is January 27th, 2026. The time is 2:37 a.m.
And that's Washington time. Crucial.
Washington time, yeah. So the Capitol is, it's dead quiet. It's the middle of the night. The Commerce Secretary, Howard Lutnick, he's presumably asleep. The Joint Chiefs, all the economic advisors, the people who are supposed to run the models and tell you what's going to happen, they're all off the clock. But inside the private residence of the White House, the lights are on, Donald Trump is awake, and he's doing something that, frankly, used to be the absolute nightmare scenario for global economists.
Yep.
He is watching a foreign stock market open in real time, all by himself.
He's watching the KOSPI index in Seoul, South Korea. It's late afternoon there, about 4:30 p.m. because they're 14 hours ahead.
Exactly. So he's watching the numbers tick across the screen. And he sees the South Korean economy is doing well, I guess. Too well, apparently. Because at 2:37 a.m., without calling a single meeting, without vetting the language through the State Department, without, checking with the Pentagon about the 28,000 troops sitting on the border with North Korea, he opens Truth Social. And he types 10 words.
And those 10 words, I mean, it's not an exaggeration to say they effectively vaporized the post-World War II trade order in about 45 minutes.
That sounds like hyperbole. I know it does. We hear about historic tweets all the time, right? But as we get into the data later in this deep dive, I think you're going to see that. You're actually underselling it. The Post basically says, South Korea has failed to pay us, the tariffs are going up, the 15% we have on them now becomes 25%, and it's with immediate effect.
It's a sledgehammer. And to understand why this matters so much, you have to realize that usually a tariff change of that magnitude, it takes 6 months of committee hearings.
At least.
It takes impact studies, lobbying, negotiation. This took 6 seconds.
And the fallout was instant. The threat hit Seoul at 4:37 p.m. their time, and it is absolute chaos. You have emergency cabinet meetings being called, ministers are getting pulled out of dinners to be dispatched to Washington. But, and this is the pivot, this is where it gets really interesting, while everyone was staring at that fire in Korea, something else was happening 9,000 miles away.
In New Delhi.
In New Delhi. While all the cameras were on Seoul, a massive geopolitical shift was being finalized between India and the European Union. And that is the absolute core of what we are covering today. This is not just a story about a tweet or a tariff on Hyundai cars.
No. If you look closely at the timeline, at the sequencing in the market data, this wasn't a trade dispute. It was a coordinated strike. It was a flanking maneuver by America's allies that effectively shattered the assumption that the U.S. is the center of the economic universe.
Okay, that's a huge claim.
Yeah.
Shattered the order.
It is a huge claim, but the data backs it up. We're going to connect 3 events that happened over just 36 hours. Trump's ultimatum to Korea, that massive $27 trillion deal between the EU and India that seemed to come out of absolutely nowhere, and a buried energy contract involving Russia that almost nobody noticed because they were too busy refreshing their social media feeds.
So our mission today is to show you how these dots connect. We've got a stack of sources here, a detailed breakdown from the Geopolitical Edge, minute-by-minute analysis of the KOPI market movements, and reports from the European trade summits. We're going to explain why the U.S.-led trade order fractured, and more importantly, what this all means for your wallet.
Because when the global order cracks, the shockwaves, they eventually hit your mortgage. They hit your grocery bill. It's not just lines on a map. It's the bottom line in your bank statement.
So let's get into Section 1, the spark. We have to start with the ultimatum itself.
Right, the Korea ultimatum.
So the core of this whole dispute is a deal. A deal supposedly worth $350 billion. Trump is claiming South Korea promised this money 6 months ago and hasn't ratified it. No, wait, hold on. $350 billion. That number just sounds fake. How can they possibly justify that? What is that money actually for?
It's ostensibly a payment for security. The justification from Trump's side is very transactional. He's basically saying, look, we've defended you for 70 years. We have 28,500 troops on your border staring down Kim Jong-un. You've gotten rich under our security umbrella. You need to pay up.
But the number, $350 billion. Can you break that down for us?
The breakdown that's been reported is 2 parts. $200 billion in direct payments over 10 years, so that's just cash transfers, wires from Seoul to the U.S. Treasury.
Wow.
And then another $150 billion in guaranteed shipbuilding contracts for American firms,
Right.
basically forcing South Korea to use its money to revitalize American shipyards in places like Maine and Mississippi.
That sounds like a lot, but I'm trying to put it in context. For a national economy, is it a rounding error? Is it a big deal?
Oh, it is so far from a rounding error. It is staggering. To give you some context, that $350 billion is equivalent to roughly 11% of South Korea's entire annual gross domestic product.
11%.
11% of everything they produce in a year. And let me give you a historical comparison that might really make it stick for you.
Okay.
You've heard of the Marshall Plan, right? The historic American plan to rebuild all of Western Europe after World War II.
Of course.
If you take the total cost of the Marshall Plan and adjust it for inflation to today's dollars, this one payment demand from this one country, South Korea, is more than double the cost of the entire Marshall Plan.
That's insane. So we rebuilt an entire continent for half the price of what we're asking one allied country to pay just to avoid a tariff hike.
Exactly. And that is why the term extortion is being whispered in diplomatic circles. It creates this dynamic where an ally is paying an exorbitant fee just to maintain the status quo, just to not be punished.
And it didn't just come out of the blue. We have to look at the timeline of escalation here to understand why Trump felt he could even make this demand right now. This didn't happen in a vacuum.
No, not at all.
January 2026 has been a very, very busy month in this timeline. It really feels like the temperature has been dialed up every single week.
Extremely. Just look at the lead up. You go back to January 3rd, 2026. Trump orders the invasion of Venezuela.
Which is a huge move. It establishes that he's absolutely serious about using force. That's not a bluff. That's boots on the ground in another country.
Exactly. The world saw that and realized this isn't just campaign rhetoric anymore. This is policy. Then you jump to January 20th, and he issues these ultimatums regarding Greenland. Again, pushing the boundaries of sovereignty with allies and neighbors.
So he's setting a pattern.
He's setting a pattern. And then, just 1 week later, January 27th, we get the Korea threat. So the psychological setup for Seoul was, I am willing to break norms, I am willing to use military force, and I am willing to squeeze you economically until you break. He expected South Korea to fold immediately. He expected them to panic and just sign the check.
But that's not what happened. And this is the part of the story that I found absolutely fascinating. We have to talk about the market anomaly. The real aha.
Reaction to the KOSPI index.
Yeah. So the threat hits Seoul at 4:37 p.m. The market is getting ready to close for the day. And what happens?
Well, the initial news hits, and you see exactly what you'd expect. A knee-jerk panic. The algorithms, the trading bots, they read the headlines, tariffs, Trump, 25%, and they just sell immediately. The KOSPI drops 0.84% in about 15 minutes.
Okay, that's standard. That makes sense. A major trading partner threatens your entire export economy. Your stocks go down.
Right. But then something strange happened.
Mm-hmm.
Then the humans step back in. The big institutional investors, the pension funds. And by the time the market closed for the session following the news, the KOSPI wasn't down. It was up.
Up after a threat like that.
It rallied 2.73% to close at an all-time high of 5,084.85.
Okay, stop. I have to pause you there because my brain is rejecting this information. You're telling me that the president of the United States threatened to crush the entire Korean economy with a 25% tax on everything they sell us, and their stock market went to an all-time high.
Yes.
That defies the laws of financial physics. Stocks hate uncertainty. This is pure, unadulterated uncertainty. Why didn't it crash?
This is the core insight of this whole deep dive, because the market, the collective wisdom of global capital, called his bluff. See, a lot of hedge funds were betting Korea would fold. They were shorting the market, betting on a disaster.
So they were positioned for a crash.
Right. But when the threat actually hit, the smart money, the big, sober institutional investors, they looked at the details. Specifically, they looked at that $350 billion demand.
And they just did the math.
They did the math. They looked at 11% of GDP, and they realized it was theater. It was so absurdly high, so politically impossible, that they concluded, this will never happen. The South Korean government literally cannot pay this without collapsing their own state. Therefore, it is a bluff.
So the market just collectively said, he can't possibly be serious.
Exactly. They said, he's bluffing, or the U.S. Congress will stop him, or the Korean legislature will simply refuse to ratify it. And if the threat is fake, if the tariff isn't actually going to happen, then Korean stocks were suddenly massively undervalued. So they rushed in to buy.
And that forced the short sellers, the guys who were betting on a crash.
He had forced them to cover their positions to avoid losing their shirts. That's called a short squeeze. And that frantic buying from both sides is what caused the rally to an all-time high.
So that swing in market capitalization, was it a $43 billion swing in one session? That wasn't optimism. It was the market calling the bluff. It was the financial equivalent of looking the bully right in the eye and laughing.
Precisely. And it signals a profound shift in global sentiment. For the first time, global capital looked at a direct threat from the President of the United States and effectively said, "We don't believe you. We don't think you can hurt us as much as you think you can." It's a vote of no confidence in American economic coercion.
That is huge. It's like the market is sending a signal that says we have other options.
And that brings us perfectly to the flanking maneuver.
Yeah.
Because they do have other options, and they were busy signing the paperwork on them at that exact moment.
Let's pivot then. Let's go to Section 2. While Seoul is dealing with this chaos, this tweet, we move 9,000 miles west to New Delhi.
Right. So while the South Korean trade minister is scrambling to get on a plane to Washington, D.C., you have Ursula von der Leyen, the president of the European Commission, sitting down in India with Prime Minister Narendra Modi.
And they aren't just having tea and discussing the weather.
No. 36 hours after Trump's threat to Korea lands, they step in front of the cameras and announce what some analysts are already calling the mother of all deals.
Okay, let's talk about the scale of this thing. What did they actually sign?
They signed a comprehensive free trade agreement. But it's more than that. It creates a combined economic zone worth $27 trillion.
27 trillion. That's a number that is so big it's hard to even visualize.
To try and put that in perspective for you, that single agreement now covers 25% of all of humanity, a quarter of the world's population. And it accounts for 25% of the entire global economic output. It's a monster deal. It creates a seamless trading bloc that stretches from Dublin all the way to Mumbai.
And the timing, I mean, come on, that cannot possibly be a coincidence.
In geopolitics, timing is never a coincidence. This is a perfect example of what analysts call panic acceleration.
Panic acceleration. Explain that concept for us.
These trade talks between the EU and India, they actually started way back in 2007. They completely stalled in 2013 over disagreements. They were relaunched in 2022. But the point is, these things usually move at a glacial pace.
Right. Years of arguing over cheese tariffs and rules for car parts.
Exactly. It's painstakingly slow. Then, suddenly, in the 36 hours immediately following Trump's threat to an Asian ally, everything is finalized. Every I is dotted, every T is crossed, signatures on paper. Done.
So Trump threatens an ally in Asia, and Europe's immediate reaction is to finalize a massive deal with another, even bigger power in Asia.
It's a signal. It's a message. It is Brussels telling Washington, we see what you are doing to Korea. We know we might be next on your list. So look at this. We can build a new trading bloc without your approval. We have options.
It's a defensive wall. They're building an economic fortress.
It's a flanking maneuver. Trump attacks their flank by hitting a key supplier in Korea, so they move around his other side to secure their supply lines and open new markets in India.
Let's dig into what this deal actually does, because like you said, $27 trillion is an abstract number. What does this mean on the ground?
It's all about supply chain integration. Let's take pharmaceuticals, for example. India is known as the pharmacy of the world. They make the vast majority of the world's generic drugs. Europe, on the other hand, makes the high-end patented drugs. This deal slashes tariffs on both sides.
So what's the effect of that?
It means Europe gets cheaper generic medicines, which is crucial for their aging populations and strained healthcare budgets. And India gets access to high-tech European manufacturing equipment to upgrade their own factories. It's a perfect synergy.
And I saw a note in the source material about cars. That was a big one.
A huge one. India's tariffs on imported cars were notoriously high. We're talking 110%.
Wait, 110%. So if you buy a $50,000 Mercedes, you have to pay another $55,000 in taxes to the government.
Basically, yeah. You paid for a second car in taxes. It made foreign cars completely impossible for most people to buy. The New Deal drops that tariff to just 10%. Suddenly, that opens up the Indian middle class, which is hundreds of millions of people, to European automakers. Volkswagen, BMW, Renault, they just got preferential access to one of the biggest growth markets on the planet, right at the exact moment the U.S. market is becoming more protectionist and unpredictable.
So just to spell it out, while Ford and GM are potentially facing retaliatory tariffs across Asia because of U.S. policy, Volkswagen is driving straight into New Delhi, virtually tariff-free.
That is the practical reality of the flanking maneuver. It's not just abstract lines on a map. It is market share and profit margins for real companies.
And there was a warning sign, wasn't there? You mentioned a source regarding the U.S. Treasury Secretary Scott Bessent. It seems like they knew this was coming.
Yes. This is a crucial piece of the puzzle because it shows the administration wasn't blind to this. They were just maybe arrogant about it. Bessent appeared on ABC News on Sunday, January 25th. That is 2 days before the Korea tweet.
And what did he say?
He was on there trying to justify the existing U.S. tariffs on India. And he said, and I'm quoting here, "We have put 25% tariffs on India." Guess what happened? The Europeans signed a trade deal with India.
Guess what happened? He was speaking in the past tense, but it hadn't been signed yet.
Exactly. He wasn't analyzing the past. He was warning about the immediate future. The administration knew this deal was imminent. They knew Europe was making a major move on their own.
So if I'm understanding the timeline, the U.S. administration knew Europe was about to create this massive bloc with India. And their response was to hit South Korea, to try and reassert dominance.
That seems to be the calculus. And Europe's response was to hit the accelerator on the India deal to show they were serious about their own strategic autonomy. It's action and reaction, but the reaction is happening at lightning speed now, and it's completely bypassing Washington, D.C.
Which leads us to the part of the story that really starts to feel like a spy novel. Section 3, the hidden layer. Because there's a third, very quiet player in this triangle.
There is. And to find this part of the story, you had to look on, like, page 12 of the Financial Times.
Very deep inside the paper, yeah.
The mainstream news completely missed it. But on January 26th, that's 1 day before the Korea threat, Russia and India quietly signed a 25-year natural gas deal. The value: $60 billion.
$60 billion. That is
Yeah.
a massive energy contract by any measure.
It is. And it's the key to understanding why the entire Western sanctions regime against Russia is failing. We really need to break down the mechanics of what the experts are calling the laundromat.
The laundromat. Now, when I hear that, I immediately think of money laundering, but you're talking about oil laundering. How does that actually work? Does the oil change color or something?
Chuckles. No, but it effectively changes its nationality. This is the hidden layer of the global economy that most people never see. Here's the basic chemistry of it. Russia pumps crude oil out of the ground in Siberia. That oil is toxic, politically toxic. If a French company like Total Energies buys it directly, they get hit with massive U.S. sanctions.
Okay, so it's a stranded asset. Russia can pump it, but can't sell it to their best customer.
Theoretically. But here's the workaround. Russia sells that crude oil to refineries in India at a huge discount. We're talking roughly 40% below European market prices. It gets loaded onto a shadow fleet tanker. These are old ships, often with no insurance, that turn off their tracking transponders to avoid detection. It sails to Jamnagar, India, which is home to the world's largest oil refinery complex.
Okay, so now the physically Russian oil is sitting in a tank in India.
Right. And into the big refining vat it goes. It gets boiled, distilled, cracked, and mixed with other crude oils. And here's the magic trick. Under international trade law, once that crude oil is refined into something else, like diesel fuel or jet fuel, it is considered to have undergone what's called substantial transformation.
That sounds like a very convenient legal term.
It's an incredibly convenient legal term. It means the product is effectively born again. The certificate of origin changes. It is no longer legally Russian crude. It is now Indian diesel. And Europe can legally buy as much Indian diesel as it wants without violating any sanctions.
So the molecules, the actual carbon atoms that are being burned in a Mercedes truck in Berlin, are physically Russian, but the paperwork says they're Indian.
Exactly. Everyone knows it. The White House knows it, Brussels knows it, Wall Street knows it. But it achieves two goals for the West. It keeps the global price of oil from skyrocketing, and it allows politicians to say they are sanctioning Russia, so they look the other way.
Let me just get this straight. Europe is still, for all intents and purposes, burning Russian fossil fuels.
Physically, yes. But politically and legally, they're buying from their new free trade partner, India.
And India is just pocketing the massive difference in price.
India is making an enormous profit on the spread. They buy low from a desperate Russia and sell high to a desperate Europe. So in this triangle, Russia gets a guaranteed customer for the next 25 years. Europe gets the energy it desperately needs to run its industries without officially breaking sanctions. And India gets rich.
And the United States, where are we in this triangle?
The U.S. is cut out completely. In fact, it's worse than that. The supreme irony here is that the U.S. had imposed 25% tariffs on certain Indian goods, specifically for buying this Russian oil. And Prime Minister Modi's response was to sign a deal with Europe to increase that flow. He doubled down.
It's almost like the U.S. sanctions created the perfect business opportunity for everyone except the U.S.
That is the hidden layer. Three major powers, Russia, India, and the European Union, have built a $60 billion per year structure that functions entirely without U.S. dollars and, more importantly, entirely without U.S. approval.
And it's not just about energy, is it? The sources say there's a major security aspect to this new EU-India deal as well.
That's the part that is keeping Pentagon planners up at night. The deal includes a security and defense partnership. You have to remember, India buys about 60% of its military hardware from Russia. That's an $82 billion market for Russian arms.
And now the EU is getting involved in that relationship.
The EU has now essentially got access to that ecosystem. They're integrating their defense industries with India's. So you have a situation where Europe and India are going to be collaborating on defense technology, potentially using Russian supply chains, or at least coexisting with them, all while the stated U.S. policy is to isolate Russia completely.
It really does sound like a flanking maneuver on every possible level, economic, energy, and military. They are methodically building a world where they don't need us.
Or at least a world where they can survive if we become too unpredictable.
Okay, so let's talk about who wins and who loses in this new setup. Let's move to Section 4.
The scorecard here is really fascinating.
Let's start with the biggest, quietest player in the room, China.
The biggest winner, by far.
But they didn't do anything. They weren't part of the EU-India deal. They weren't involved in the Korea tweet. They were just on the sidelines.
That's exactly why they won. China is watching all of this unfold and doing absolutely nothing. They are just letting the Western alliance tear itself apart. It's the old Napoleon maxim, never interrupt your enemy when he is making a mistake.
Can you give us some specific data points? How is China actively benefiting from this?
Sure. Look at South Korea. As the U.S. puts more and more pressure on Seoul, where do you think Korea turns? In the fourth quarter of 2025, South Korea increased its imports of critical semiconductors from China by 12%.
So while Trump is threatening them with tariffs, Korea is quietly moving closer to Beijing's economic orbit.
Precisely. They are hedging their bets. And look at this other move. While everyone in the media was watching the tariff show, what did China do? In December 2025, they quietly tightened their export restrictions on rare earth minerals by 15%.
And nobody noticed.
Nobody noticed. The entire news cycle was dominated by Trump's tweets. So China is securing its strategic leverage. They control the minerals needed for everything from EV batteries to F-35 fighter jets, while the U.S. is burning its diplomatic capital with its own allies.
And there's a currency angle here too, isn't there?
A huge one. The EU-India deal, by design, will reduce the global demand for the U.S. dollar. They've explicitly stated they will settle trade in euros and rupees whenever possible. Every transaction that doesn't use the dollar chips away at its dominance. That directly aids China's long-term strategic goal of internationalizing the yuan.
The less the world needs dollars, the more open they are to a new alternative.
Exactly. Okay, so China wins by sitting still. Who else is on the winner's list?
India. It seems like India played this perfectly.
I'd argue India is the perfect hedge. Prime Minister Modi is conducting a masterclass in modern non-alignment.
He really seems to be playing 3D chess while others are playing checkers.
Think about what he's accomplished. He's buying discounted Russian oil and gas. He's refining it and selling it to Europe at a premium. He's accepting U.S. military aid and intelligence to counter China on his border, but he's still buying his most advanced weapons from Russia.
He's playing all sides against each other for his own benefit.
He has made India the one country everyone needs. The U.S. needs him as a counterweight to China. Russia needs him as an economic lifeline. Europe needs him for energy and as a new market. He is dancing with all of them and taking gifts from everyone.
And it's working. He's getting richer doing it.
Look at the results from the sources.
Yeah.
India's foreign currency reserves went up by $58 billion in 2025 alone. Foreign direct investment into the country is up $78 billion. He is literally funding his country's rapid growth on the back of the West's strategic confusion.
Now, here's a surprise winner that I did not see coming when I first looked at this. Japan.
The silent winner. The one smiling quietly in the corner.
Why Japan? How do they benefit?
We have a bonus detail from the market data. The very same day that Trump threatened South Korea with those crippling tariffs, the Japanese stock market, the Nikkei, rose 1.2%.
Why would it do that?
Pure, cold, logical competition. If Hyundai and Kia, South Korea's flagship car brands, get hit with a 25% tariff in the massive U.S. market, whose cars suddenly become much cheaper and more attractive by comparison.
Toyota,
Honda.
Nissan.
Exactly. Toyota becomes more competitive overnight without having to do a single thing. So while South Korea is in crisis, Japan is quietly cheering for Hyundai's punishment. They are the silent observer benefiting directly from their neighbor's pain.
That's brutal. Okay, so we have our winners. Let's talk about the losers.
South Korea is the obvious #1 loser here. They are trapped.
They really are stuck between a rock and a very hard place.
Think about their position. They need the U.S. military, period.
Yeah.
They cannot defend themselves against North Korea alone. But their economy is completely dependent on China. 25% of all their exports go to China. And now, the security guarantor, the United States, is demanding 11% of their entire GDP in what amounts to protection money.
And their president, this President Lee, he's in a politically impossible bind.
Completely. Because the markets rallied, remember. The circuits think the whole threat is a bluff. So how does he go to his own legislature, his National Assembly, and convince them to approve a $350 billion payment when his own country's stock market is screaming it's not a real threat?
He can't. He looks weak if he pays the extortion, but he risks economic catastrophe if he calls the bluff and is wrong.
Exactly. And that leads to the final and perhaps most significant loser, the United States itself.
Because of the loss of the permission slip?
That is the perfect way to put it. That's the key. For decades, since World War II, allies essentially asked for Washington's approval before making major strategic moves. That era may have ended this week. Allies no longer ask for permission, they just build workarounds.
And we lost the tariff leverage.
We lost the tariff leverage because the markets ignored the threat. When you pull out your biggest economic gun and nobody flinches, you have lost a significant amount of your power.
This really feels like a historical turning point, a major global shift.
It is. And in our last section, we need to put this into context. This isn't just about a tweet in 2026. This is part of a 15, maybe 20-year trend.
The slow decline of dollar dominance.
Correct. If you look back, you can see these cracks forming for a long time. In 1971, Nixon closes the gold window, ending the direct convertibility of the dollar to gold. That was the first major shock. Then in 2003, George W. Bush invades Iraq over the strenuous objections of France and Germany. That was a major fracture in the Western alliance. Then you have Trump's first term, pulling out of the Iran nuclear deal, the Paris Climate Accord. All things our allies begged us not to do.
And now, in January 2026 alone, we have Venezuela, Greenland, and now Korea. It's an acceleration.
It's a clear pattern of the U.S. acting unilaterally, and the rest of the world slowly but surely building up an immunity to our actions.
The numbers in the reports are pretty stark when you look at them.
They are. Let's talk about the dollar's share of global central bank reserves. In 1999, the U.S. dollar made up 71% of all global reserves. Today, in 2026, it's down to 58%.
That's a steady, consistent drop.
It is. And the tipping point, the point where it's no longer the undisputed global currency, is generally considered to be when it falls below 50%. Most economists now expect us to hit that sometime between 2028 and 2030.
And what about the tariffs?
U.S. tariffs, on average, are now at their highest level since 1934. We have rebuilt the same trade barriers that worsened the Great Depression.
So where does this all go? What are the possible scenarios for the future?
The sources lay out three main probabilities. The first, and still the most likely at around a 45% chance, is the slow decline. Think of the British pound sterling.
It didn't just disappear overnight. It was the world's currency, and then it wasn't.
Exactly. It took about 30 years. In this scenario, the U.S. dollar remains very important, but it's not the dominant currency. We become just another major currency in a multipolar world.
Okay, what's scenario 2?
Sudden rupture. This is the scary one. The analysts give this about a 30% probability. This would be a Nixon shock-style event, something sudden and sharp that breaks the system. Maybe China decides to dump all of its U.S. treasuries at once, or maybe the Saudis announce they will no longer price oil in dollars, but in yuan instead.
And what would happen to the U.S. economy the next day?
Immediate, massive inflation, chaos in the banking system, a true crisis.
And the third scenario?
Managed transition. This has about a 25% probability. This is the optimistic one, where the major powers all sit down and negotiate a new global financial system, a new Bretton Woods conference, essentially.
But given the current levels of conflict and mistrust, that seems unlikely.
It's the least likely, precisely. It requires cooperation, which is in very short supply right now.
Now, I want to bring this all home for you, the listener, because we've been talking about reserve currency status and geopolitical flanking, and it can all sound very abstract.
Yeah.
But you're saying this will directly hit people's wallets. I want to break this down specifically.
Let's do it. It's the most important part.
Okay, let's start with mortgages. A 30-year fixed-rate mortgage. If the dollar loses its special reserve status, what happens to that rate?
It explodes. It has to. See, right now, the U.S. can borrow money incredibly cheaply because the whole world needs to buy our debt, our treasury bonds, in order to conduct trade. If they stop needing to buy our bonds because they're trading in euros or rupees or yuan, we have to offer a much higher interest rate to entice them to still lend us money.
So what does that look like in real numbers for a family?
Imagine the average mortgage rate going from, say, 4.5% to 7.5%. On a typical $400,000 home loan, that is an extra $1,000 a month, every single month. That is $12,000 a year that just vanishes from your family's disposable income.
That's a car payment. That's a family vacation. That's a huge chunk of a college fund. Gone.
Gone. Not to buy anything new, just to service the interest on your existing debt.
And what about inflation? Not just the headline number, but what does it mean for your weekly grocery run?
Think about all the things we import. Coffee from Brazil, bananas from Ecuador, your television, your clothes. We pay for all of those things in dollars. If the dollar is weaker on the global stage because it's no longer the reserve currency, we have to pay more of our weaker dollars to get the same amount of stuff.
It's the $5 gallon of milk.
It becomes $6.20. The $1,000 iPhone becomes a $1,500 iPhone. Your overall purchasing power, the amount of stuff you can actually buy with your paycheck, could realistically drop by 20 to 30% in a short period.
So when we see a story about Trump tweeting at 2:37 in the morning, and we see Europe signing a deal with India, what we're actually watching is a story about whether we're going to be able to afford a house or our groceries in 5 years.
Absolutely. Geopolitics is just economics with an army. And right now, the fundamental economics of the world are shifting away from the United States.
So let's bring this all together. Let's wrap this up. What's the final synthesis?
The final synthesis is this: a tariff threat that was intended to extract money, to shake down an ally for cash, instead acted as a catalyst. It accelerated the formation of a rival economic bloc worth $27 trillion.
We pushed, and instead of falling over, they linked arms and stood stronger.
Exactly. The U.S. is playing a 10-day game. We are reacting to tweets, to cable news cycles, to short-term polling. Meanwhile, China is playing a 10-year game focused on long-term strategy. And our allies, they're now playing a new game called survival.
So what should we be watching for next? If you're listening to this, where should you look for the next shoe to drop?
Two things. First, keep a very close eye on the South Korean National Assembly debate. It's scheduled for January 29th and 30th.
And the question is, will they pay?
That's the multi-billion-dollar question. Will they ratify this $350 billion deal out of pure fear of what the U.S. might do? Or will they reject it out of spite, emboldened by the fact that their own stock market told them they could?
And the second thing to watch?
The G7 finance ministers meeting. It's happening in France in February 2026.
Why is that one so important?
Watch the language in the final communique. Will there be a coordinated statement, a strong defense of the U.S.-led system? Or will there be vague diplomatic language and reports of ministers holding separate side meetings? If the G7 cannot speak with one unified voice after this, the breakdown is official.
I want to leave the listener with a thought you shared with me before we started recording, the idea about how an empire falls.
Right. The empire doesn't fall in a day with one big battle. It falls over decades in 1,000 cuts. We just watched cut number 4. The Iraq War was one. The 2008 financial crisis was another. The first Trump term was a third. This was number 4.
That is a chilling thought.
And so here is the final question for you to mull over. Do you think the Korean legislature will fold under the pressure? Or did that stock market rally in Seoul just predict the end of American economic leverage for good?
That is something to think about. We'll certainly be watching closely. Thanks for listening to The Deep Dive,
Stay curious.
and we'll see you next time.